Is Charlotte on the brink of a fast-paced downturn in home prices? And could home prices in Charlotte start falling at a faster rate than in 2006? Well, we'll have to see, but from what I just read, it certainly is a cause for concern, and I'll tell you all about it right now. Hey there, and welcome back. If this is your first time to the channel, thanks for stopping by. My name is Brian Taylor, and I'm the owner of Dreamline Realty right here in Charlotte, North Carolina. And if you're a returning viewer, thank you so much for coming back and checking out this video as well. So I came across an article today that really causes some concern for the Charlotte area. And if you've been paying any attention to the market over the last 2 to 3 years, you're probably well aware that the start of the pandemic, when interest rates dropped to all-time lows, real estate investors came in droves to the Charlotte area, buying up properties with cash. And for a lot of first-time home buyers, that was a very painful experience because they simply couldn't compete with all these cash offers. But now, as interest rates have skyrocketed and the market has completely shifted, do these investors have different plans that could potentially cause home prices to fall at a sharper pace than some are expecting? And stick around to the end of the video because I'm going to show you how many homes these investors were buying in Charlotte as compared to other cities across the country, and take a guess where Charlotte ranks. But for now, take a look at this article from Forbes. It reads, "Home prices are falling faster now than in 2006. Redfin CEO just revealed why." It says the pandemic housing boom unleashed an investor mania unlike anything seen in the US housing market since the aughts housing bubble. Average Joes poured into the market in hopes of building Airbnb empires. Institutional investors like Blackstone-owned Home Partners of America quickly expanded their single-family home portfolios. Home builders eager to strike while the irons were hot broke ground on a record number of spec homes, while iBuyers like Opendoor and Zillow ramped up their algorithmic home buying program. So yeah, that's a good way to say it. It was investor mania right here in Charlotte. But the investor activity today is almost non-existent. And if you remember, about a year ago, Zillow stopped buying houses altogether. So a lot, of course, has changed. But the article gets better. So fast forward to October, and that investor mania has been replaced by investor panic. The ongoing housing correction, US home prices have fallen 1.6% between June and August, has scared many investors to the sidelines. That marks the first national home price decline since 2012. The investor pullback makes sense. While most housing economists don't foresee a correction on a scale with the great financial crisis bust, during which home prices fell 27% between 2006 and 2012, they do acknowledge that this home price correction is sharper than it was in 2006. The lagged Case-Shiller Index already shows that home prices are down 8.2% in San Francisco. And if you watched my last video, we talked about how Charlotte saw its first month-over-month price decline from July to August. While it was only a 0.3% decline, it was almost a full percent lower than the month before. So we're starting to see the reversal take shape. But let's get back to the article. To Redfin CEO Glenn Kelman, the pandemic housing boom's investor frenzy helps explain why home prices are correcting faster this time around. Historically speaking, home prices are sticky. Sellers simply don't want to relent on price unless economics, like a supply gut, force their hand. That's not as much the case for institutional investors and builders. If they think prices are about to drop, they want to get out first. The fact that the pandemic housing boom saw investors become a higher share of buyers, Kelman says, ultimately makes the US housing market more vulnerable to a faster swing down. And coming up next is the punchline to the article. This is why Charlotte could be at risk. It says, when the shiitake mushrooms hit the fan, you investors want to get out first. The way to do that is to figure out where the lowest sale is and be 2% below that. And if it doesn't sell in the first weekend, move it down again, Kelman says. In other words, Kelman is suggesting that real estate investors, including Redfin's iBuyer business, help drive home prices up faster during the boom and will push prices down faster during the correction. Now, why do I say that Charlotte could be at risk? Because what I'm going to show you next will solidify my point. But before we do that, think about this. All of these investors scooped up all these houses in Charlotte when the market was booming and nobody thought things would reverse. They overpaid for most of these houses, and it was easy to find renters because most first-time homebuyers couldn't compete to buy them in the first place. But what is happening now is their leases are ending and property values are falling. With no upside in the foreseeable future, it makes sense for the investors to sell off their portfolio and get out while they still have the most amount of investment still that they can gain. And with interest rates rising and buyer demand falling, they'll be willing to be aggressive in their listing price to get it sold faster, even if they have to reduce it by 2% less than what others are selling for, just as that article just said. So now I want to show you what you've all been waiting for. So take a look at this. This chart shows the percentage of homes bought by investors between the first quarter of 2021 and the first quarter of 2022. With the exception of Atlanta, 32.2% of Charlotte homes were purchased by investors. And that's why Charlotte could be vulnerable to quicker price drops as we head through 2023. All right, guys, tell me what you think. Drop in the comments below if you think the investors in Charlotte are gonna have a fire sale on houses coming up here in the near future. And maybe you think something completely different, but I'd love to hear from you. So drop down below what's on your mind. And if you thought this video was helpful, do me a huge favor and give it a like. That really helps me grow my channel, and I would really appreciate that. And finally, if you haven't subscribed, go ahead and do that now, and then tap on the bell for notifications so you don't miss out on any videos that I put out every single week. Thanks so much for watching, and if you want to check out the last video where we talk about Charlotte prices starting to make a U-turn, you can find it right here. And as always, make it a great day.